Gwen, Preston of Resource Maven. I'm here at the Metals Investor Forum in Toronto at the beginning of March. It's PDAC time again already.
Oh boy.
And I'm joined by Trey of Ely Gold Royalties. Good to see you. Haven't sort of caught up in a little while.
Nice to see you, Gwen. And again, congratulations on the new addition to the family.
Thank you so much. Of course, she's with me at the conference, because
Of
that's what everyone does,
course.
right? You all bring your babies. Anyways, you guys had a very busy year, but before we get into some of the deals, some of the swath of deals that you closed in 2018, let's step back a bit and just remind everyone what Ely does and why it's a bit unique in its approach to being, in its ability to put together land packages and gather royalties in Nevada, which is such a heartthrob state for the industry.
Okay. Well, what makes us different is while we certainly are a project generator and vend projects to other companies, don't do exploration ourselves. Mm-hmm. Our goal is to generate royalties from the properties as opposed to joint venture interests. You know, we were in a joint venture on our Mount Hamilton project. In the end, it was successful. We sold the project and we got our 20% share of the cash, and so that was one that certainly worked out. But there's inherently some big problems with
it just gets complicated when you have a portfolio of joint ventured projects. It's very complicated.
It's complicated even as the junior partner. You know, sometimes you're compensated for the work, but you have to have more staff. You have to sit in on meetings. There's just a lot to the joint venture model. What we do with our properties is we either sell them outright, 100%, or we sell them over a 4-year option. Similar to a joint venture, they make option payments, they escalate some money on closing, payments escalate over 4 years. Largest payment is generally at the end.
Sure.
And they earn 100% by making all the payments, or they earn nothing.
Right.
Unlike a lot of joint ventures, we don't put work commitments on our projects. Our bigger partners, the majors and mid-tier producers, we feel we don't need to tell them how to spend the money. If they're taking one of our projects, they're taking it not to inventory it, not because it's something they're out trying to raise money with.
Right.
They like the project and it fits somehow in their portfolio.
Yeah.
The junior partners, and we have some very good ones, by not having work commitments, they're able to hold on to our projects in the bad market. They can cut back their exploration budgets, not have to come to us and renegotiate work commitments and everything. Make the option payment, and when the market gets better and they can raise money,
then off
they still have our project. Most of our partners, a couple like Fremont Gold was successful this last year in raising money. American Pacific was successful and did a raise. So we're fairly selective even in our junior partners in picking out people that we feel have a reputation for being able to raise money.
And I would say you can be somewhat picky because you have a pretty great portfolio of projects, and that again is unique. Well, everyone says they have a great portfolio of projects, but I would say Ely has a bit of a unique angle on that in between yourself and Jerry, who's your sort of partner in leading the company, have a unique history of and understanding of the crazy quilt jigsaw puzzle of landowners and families and royalties and historic stuff that's gone on in Nevada, where people have been looking for gold for many decades. And your expertise is figuring it all out, making deals. If it takes 25 deals with 13 different families to get a property together, that's what you guys can do.
That's where we set ourselves apart, is that most of our projects are underexplored. Many of them have had the same ownership or fragmented claim problems going back, clear to the 80s and 90s.
Yeah.
And of course, Jerry's been doing this for 35 years and built up one portfolio that was sold to Frontier, which eventually went to Newmont. And then, of course, 2 years ago, we bought out Bill Sheriff's properties.
Right, yeah.
And Bill's database, and Bill came on the board. So between the two of them, we have about 75 years of prospecting in Nevada. I mean, they know where all the properties are. They know the landowners in most cases. And yes, most of our best projects are where we've done several deals in the background to put a project together the majors and mid-tiers simply won't take on that risk anymore. You know, they're the guys who are recommending the project to the company. They're taking enough risk just saying there's gold there. But when they say, okay, well, but we're going to have to buy these, you know, put the package back together, they won't take that risk.
Right.
So that's where we've set ourselves apart and been able to attract, you know, very high quality partners.
I'd say one good example of that is the deal, one of your more recent deals, which is with Premier Gold, where you sold them a project that's just sort of north of the joint venture ground that they have with Barrick. Again, you cobbled that package together, something that a bigger partner wouldn't have been able to do, and then you brought in Premier, who's like a great company.
Yeah, that's a good example because that property was held by the same group for over 40 years, since the 70s.
Right.
Over the years, it started out with just a couple of partners on the property, but they wouldn't, you know, there were deaths, there were heirs. In the end, there's 12 different owners of the property, and Barrick's just simply could never get a deal put together on it.
No.
And we were able to buy some of the claims, and some of the claims came open for staking, so we were able to put that package together. And it's a very exciting piece right there, literally in the middle between the D mine and South Arturo, and Premier is going to be working on that this year.
And I mean, that's sort of the Ely story, is that you see the opportunity, you're able to put together the land packages in ways that others can't. You put in the time. I mean, it takes a long time to negotiate with 12 partners on a project. So now you've done a lot of deals in the last year from projects that you've put together. I'm sure I know you have more in the works and still a portfolio that you're ready to continue evolving and vending as 2019 rolls through.
Well, we've been at this for 3 years now with Jerry. And started with Jerry really around PDAC time 3 years ago. And at that time we bought from Jerry, I think it was 19, 20 properties. I think 5 of them were optioned out, and there was 1 royalty.
Right.
You know, fast forward to today, we have over 70 properties in our portfolio. 50 of those are being worked by third parties. And they include 31 royalties. So a deeded royalty interest is where we have sold the property, or they've exercised the option,
right,
or we've found that royalty from a third party and purchased it. But there we have no interest in the property anymore, only the royalty interest.
Right.
Then we have 19 properties in the option portfolio that are being purchased over time.
Right.
So. Now, last year was kind of a watershed year for us in that we actually had the cash flow from the option portfolio to go out and buy some third-party royalties. So we bought one on the Fenelon property. This is our one project that's up in Canada, being operated by Wallbridge. They're in a bulk sampling program now. We expect to be paid on that as well as the production. It's a 1% royalty, but the results that Wallbridge has been getting since they've been there and doing this bulk sampling so they could explore underground have been some pretty phenomenal, very high grade.
The grades are insane at Fenelon.
It's
super
crazy,
high grade.
and very mineable widths as well. So the other royalty, we were able to purchase a 3/4% royalty on the Isabella Pearl, which is currently under construction by Gold Resource. Mm-hmm. They're just finishing that up. They're actually putting ore on the pad right now. And besides this Isabella Pearl royalty that we purchased, over the years we've sold them 3 other properties that make up their Nevada mining unit. So they're all within 10 miles of each other. One was Mina Gold, one county line, and we sold them some claims at East Camp Douglas. Plus we sold them all the exploration on trend property at Isabella.
Yeah.
So as Gold Resource now will go into production, we'll start with a small royalty, but we expect them to do an aggressive exploration to expand right there at Isabella and onto our ground where we have a higher 2.5% royalty. But also they're doing exploration at the satellite Mina Gold. Mina Gold has about 100,000 ounces of a historic resource. They're proving that up and trying to find more. To the extent that Mina Gold does not become a mine, they will truck the ore that is there. And the same with another project, County Line, has about 50,000 historic ounces. It's about 3 gram material. That one, they're going to haul that 3 gram material probably right away anyway, but they will be exploring and trying to make, ultimately have satellite mines there. So,
And I mean, that's sort of the Ely story captured in one aspect of it, in that as a growing royalty company, you start with a small portfolio, you vend them out, you keep royalties, you continue acquiring projects and vending them. Your royalty portfolio grows, your option payments grow, your royalty income starts to grow as projects get put into production. Then you have the cash flow to continue doing it, and it just keeps evolving from there, right? And,
right.
and you've really proven that you're on that staircase already.
We started out, like I said, last year having the capital to purchase the 2 royalties that are either producing or near-term producing. This year will be the same thing. You'll see us add some more royalties that we buy from third parties, and continue to do the property deals. So, of our 70 properties, as I said, 50 are being worked and are in our option royalty portfolios, but we have 20 that we're working on. And, I would say half of those 20 are available for sale. The other 10 are ones we're still working on in the consolidation phase on them.
Right, yeah.
But another key to that is that can't stress enough is our database. Between putting Jerry and Bill was a data junkie, so Bill over the years has purchased all of the data from Atlas Gold, who probably did more exploration in the 80s in Nevada than any other company. USMX, the Lyle Campbell Trust, which Lyle Campbell's famous for some of the better discoveries and the discovery of the Carlin gold system in general. And so that database allows us to, again, identify the better properties. But then when we go to vend them, the guys are looking at full data rooms on a property, not just, here's
ideas.
Idea or here's an old report. And so they're able to evaluate the properties much better, and then when they start with their development program, they hit the ground running with full data package. Yeah.
Well, it's not the most straightforward story in terms of it's not, here's the project I'm exploring and here's why it's exciting, but I really love the business model. I think it makes a lot of economic sense. You're obviously working in Nevada that the industry is in love with. You have a database that's, best in class. So yeah, I'm really excited to be on board, and I hope other people are interested in the opportunity as well.
I think, if you look at us, we're currently selling around 18 cents. I mean, we're one of the few stocks that's setting new highs in here off of in this market. But still, even at today's price, our market cap's about 15 million. We've got 2.5 million in cash, about $1 million in securities of our partners. So maybe an $11 million enterprise value. And, and yet, if you look at the quality of the properties we have there, very good chance, we think, for some real home runs on the exploration side. And I also think you'll see us now with the cash flow doing some very exciting things as far as growing the portfolio through outside third-party purchases.
Well, good luck with all that. I look forward to keeping up.
All right. Thanks, Gwen.
Thanks, Trey.